Hey, it's Tyrone Jackson from WI Trade School. Okay, let's jump right in and talk about stocks that are hot and stocks that are not. Right now, we're seeing trends in the stock market where cheaper stocks are not doing well. Why? Not because the stocks are cheap, but because the revenue is not there to support the stock price. Now, I know a lot of you like to gamble with your money and take a risk on stocks that you think are up and coming or will go higher in the future, but without the revenue, it's simply not going to happen. Take a look at this chart. I always teach you that a picture is worth 1,000 words. Look at what's happening right here. This is Uber, right? Uber year to date, Uber over a 1 year period, Uber stock over a 2 year period, Uber stock over a 5 year period. What is happening here? What's happening is that the stock price is going down, 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 down. Why? Because Uber keeps losing money on a quarterly basis. On this last quarter, Uber had $3.8 billion in revenue, and after they paid all their bills, guess what? They had $1.6 billion in loss. Wall Street does not like losses. You can't continue to take losses and have people buy your stocks. That's why the stocks have gone from $46 with the chart that you see here all the way down to where it's going now, which is 28. It's probably going lower. Now, always what fascinates me is Uber is being traded in the same market as Apple. Now look at Apple's long-term trend here. The stock is up, its stock is up, its stock is up. It pulled back here because we had some geopolitical events and some issues dealing with China and trade, if you remember that. And the stock took a haircut. But every time they come back with very strong earnings, we see this pattern here, which as you know is called retracement. Pullback followed by retracement. That's the pattern that you want to see. Now, both Apple and Uber are in the same market. Why is one stock being favored over the other? Well, right before I answer that, look, Apple closed here at 257. And the reason that the company is actually being in favor here or finds itself in favor is because in the last earnings report, they saw 18% growth in revenue in what? Their service sector and 54% growth in wearables on $64 billion in revenue. Gang, you don't have to be a genius. You take a look at the 2 year chart, the 1 year chart, year to date. This stock is in favor, right? So sometimes as traders and investors, it's to our advantage to trade, right? Like covered calls or invest in stocks that are more expensive if the revenue is there for the stock to go higher. And why? Wearables are a really big thing right now. Everybody loves the Apple watches and all of the other devices that are part of that family, and it's winning with consumers. Okay, so I don't have to tell you Uber a no buy. Even though the shares are cheap, you want to stay away. Apple, I would have to recommend as a strong buy. Now, let me just say this is my final recommendation on Apple. Even if you just get 10 shares, 5 shares, you are in the game with stocks that are in favor. So don't fall into the imaginary land of, hey, I don't have enough money to buy 10 shares. Get 5 shares, get 3 shares. Why? Because these shares are on the move. The most important thing is if you're new to investing is that you are what? You are trading with the trend and not against it. So what I'm going to do, just so you get to know the wealthy investor approach a little bit more, in the links below, I'm going to leave some links down below to some other wealthy investor videos that I think will help you. All you have to do is watch them. Okay? So it's about fundamentals and trends and stories that are in favor. That's what's going to help you make a lot of money in the stock market is understanding those three things. But fundamentals, 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 top line revenue and net profits, it's going to be your key to success in the next 6 months to a year.